Hello everyone, K Kim here from Traders Club. You know what? I thought I'll do a quick market update for my blog followers. And so currently looking at Spider S&P 500 ETF here on a daily chart. And what I wanted to look at first of all is we've been last 2 days. What we have been doing? We've been just moving kind of last 3 days, pretty much moving sideways here, kind of a gapped up, gap down, gap up, kind of move all up and down throughout the day. You know, intraday volatility, and just pretty much really didn't go anywhere, just hanging out in this 100 SMA level. Well, here's the thing I'm really looking is, first of all, when I go to 65-minute chart and then just kind of look at an intraday volume action, this is a conclusion. Well, ever since we've broken below that important support level here on the this is the level that we've broken at like 160 level, that was a pivotal level, and we came down pretty hard here with a lot of volume coming in, and then bulls trying to give that little bit of push there. As you can see there, we had a falling volume. See this 3 session right here, 3 session here, falling volume, and then towards the end of the day, this is a 65-minute chart. So end the last 1 hour, you can see that the volume increased. Right there, volume increased as that last hour when bears start to give a pressure, and then we gap down, and then what happened? Look at the huge volume on the sell side, and then what happened? We trying to gap back up here. This was yesterday for 4 sessions, but the volume started declining here. You can see that last 4 sessions there, volume decline, and then bears came in, had a sell-off here. Let me close that, and you can see, that. So another volume break, or volume, increasing volume towards the end, the last hour. And then today, what happened was, well, another day to gap up, and then we had a kind of a sell-off for first hour. You can see that volume really came in, and then what happened? And then we started going higher a little bit. See that? 1, 2, 3, 4. And then what happened to the volume? Well, volume coming down again. You see that? And then last hour, again today, this was just now, just last hour, what happened was, well, bears came in again, like here, and then what happened? The volume increased. So what is it telling us? What is it telling us when I go to daily chart and then just kind of make a, with all those analysis and make a little lemonade out of it? Well, basically telling us, well, bears are still in charge. Bears are still in charge, and last 2 days here, this is what I look like, more like a bear flag here. Though I think we could come back up higher. There's a possibility we could have a 3 days of bear flag, but I think we have a pretty good signal probability here that we might be moving sideways. Maybe tomorrow we gap down and we do another kind of a sideways movement, maybe like a doji or spinning top, and then possibly that bearish move is going to continue. But I do think that bears are still in charge. I don't think that these last 2 days action is not. It indicates nothing of any kind of bullish reversal. We are below this 50 EMA, as you can see that, and we've broken about this uptrend channel support. Not only that, we're still below. You can see that the recent high from April 2013, we're just retesting that vicinity. Not only the first thing that one thing I talked about on the last video. Let me put in 10 EMA here. When I talked on the last video, is the first signal that you're going to watch out for is what? That if you want to see any kind of corrective move, you want to see this on weekly chart. You want to see this breaking below, closing below after week is ended on Friday after close, closing below 10 EMA, because that was an early indication, very early indication the correction move has high probability correction move is going to happen. You can see that after breaking below 10 EMA with a 1, 2, 3 weeks of correction there. Right? And then what happened here? We closed below 10 EMA here on this weekly chart, Spider. 1, 2, 3. 3 bars. So with another 3 weeks of correction move there. We closed below 10 EMA last Friday. So can we expect another 3 weeks of correctional move? You know what I mean? It has its probability, it has its chance. I think that it has a good probable sense that it has a good chance that we could come down here and test that 50 EMA on this weekly chart. I do believe that there's a high probability they could do that. I mean, last Friday you see that the selling volume there with the huge bearish candle there. I mean, you can see on these wicks. I mean, during the week there was some volatility coming in. On this occasion, we had some volatility coming in. Though you can see that some of the wick here on this weekly chart, obviously it's not finalized weekly candle, so we do not know. Today being Tuesday, we do not know how it's gonna end. But there is a good probable sense that we could have another 3 weeks of a bearish movement from here. And another thing I do want to note is that when we look at daily chart, let me get rid of that 10 EMA here. When I look at daily chart, here's something that is very unique in a sense of a pattern is concerned. This is something that I was talking about. If you guys, you guys read my most recent blog about, is it a Thor's hammer or is it Bob the Builder's hammer, right? And that I talked about. The one the example was this day right here. Right there. This was back in, what was that? May and April 2012. This right here has a very similar sentiment of what's happening today. Because first of all, we have this wide scale of kind of a leaning double top there. What I mean by leaning is it didn't quite get up all the way up to about 142 level there. Though we had a wick. But if you put on a line chart, you're gonna see that we have this leaning double top. I put a little bit more weight on this leaning double top because bears were anxious to push this thing down. They don't even want this to get up here and start flirting around with this resistance level. It just started tanking there. Well, what happened was very similar. What happened was, well, we broke below 50 EMA. You can see that the pink line there, and then we threw a hammer right at this 100 SMA, and this is what it had many people talking. That's a hammer reversal candle there, and then it's forming right at the 100 SMA. And one thing I talked about on my recent video, that recently today, this 100 SMA hasn't been, this was back in December there, and this was when 100 SMA was kind of hanging out. You can see that 100 SMA hasn't been respected at all. Just trading all around it back here, just plow right through it. There's no hesitation, there's no struggle, nothing. It just boom. You know what I mean? Right here, you can see they trade all around it. Just Spider does not really, just looking at the past behaviors, it does not like to, you know what I mean? Does not like to respect 100 SMA. As you can see, that it's been respecting 50 MA quite well, just right there. But the 100 SMA, not really. And so when I saw this right there, see that hammer? Just exactly the same hammer that we saw in May 2012 and right at the 100 SMA. And that's what I was talking about. A lot of people are saying that, well, that's the hammer, that it's going to change everything, it's going to reverse. Well, that could happen, but it had a low probability of that happening. It had a higher probability that it wasn't going to completely ignore it. And it did. Look at the next day, just a spinning top there, and then today kind of gapped up and a doji there. So we're not respecting 100 SMA at all. We're just moving all around it. And so that, just giving this right here, this pattern looks like, we have a leaning double top as well here. You see, because it wasn't able to get up all the way to about 167 level or even 168. Bears were anxious to push this thing down at this vicinity, so I give you a little bit more weight on this leaning double top, which has a little bit more, it has a much more bearish sentiment than if it was just regular double top. And then we broke them below 50 MA, you can see that, and then we form a hammer, we're start moving sideways. What does that remind you? What does it resonate with? It's back here, right here. Obviously, I'm not saying that's exactly how it's going to play out, but look at this leaning double top there, broken 50 MA. We threw a hammer there, gap down, gap up, gap down, move sideways for about 4 sessions there, and then just hanging out all around in that 100 SMA. And then what happened? Boom, 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 right? And then we just kind of 4 days. Look up at that, gap down, gap up, gap down, and then we just had that about 1, 2, 3, 4, 5 day, 1 week straight, 1 week of tankage there. So right now, is that what's happening? Pretty much. You can see that we have a hammer, gap down, gap up, and if it's gonna play out just like it did back in May, we might have a gap down tomorrow, and then just start moving sideways, and when it cracks, it could have that steep decline happening there. And here's another alarming thing that I wanted to talk about is, well, when I look at VIX. And this is something that I've been talking about, I've been tweeting about, and I've been writing about on my blog as well, is this. This is bullish divergence on a weekly chart. Okay? And this bullish divergence is now confirmed We broken above that, broken above that, and broken above that level. It is now confirmed. And so again, being this weekly DAC candle right there, that one bar represents 1 week, but today is Tuesday, so we do not know which bar it's going to be. And so what I did was I kind of studied, well, what if this thing actually plays out? Because there's a high probability it's going to play out, because we're looking at about 14 years of data here in this chart, this weekly chart on VIX. Obviously, VIX moves inversely to Spider. Basically, if VIX soars, Spider is going to tank. And then last 2 times when we had this bullish divergence confirmed, we had this huge breakout to the upside, and I just want to look at the behavior of that. And so what I did was, well, I want to look at this right here. This was a July 25th 2011. So let's go to look at July 2011 and see what it looked like. Actually, let's go to here, July 2011. July, right there. So right here. You can see that July 2011, this was it. When VIX broke out of that, this is what we had. 1, 2, 3, 4, 5, 6, 7, 8, 9 days. So it's about a week and a half of just total mini crash there. That's what we had when VIX just soared. Okay, so that's what happened on here. That's what happened on this week right here when it broke out of this bullish divergence. Okay, remember MACD making higher lows, and then it either moving just sideways, equal lows or lower lows. These are lower lows, lower lows. This is slightly lower low, but you can also say that it's there are slightly low lows there. So let's look at this one. This day was what? May 2010. So let's go look at May 2010. What it looked like. So what I'm trying to find out is if VIX starts to soar, what are we going to expect in the spider? What kind of a movement we're looking at? So May 2000, you can see that May 2012 here. You can see that. So this is what we saw last time we broke out. We had a very fast decline and then gapped up, and then we pretty much tested 50 MA and then another decline there. So we had a huge volatility, but it kind of ended with not pretty pattern. It was pretty bearish. It just just tankage there. Just like see 1, 2, 3, 4, 5, 6, 7, about a week, and then if you're gonna put these there, about 2 weeks of tankage there. So when I go back to a weekly chart here, so that's what we saw at this vicinity when VIX did that. And that's what we saw here when VIX did this. Was we just looked at this. So today, when this thing starts to go higher like that, and this bullish divergence, because it's already confirmed, it's ready to soar. It has high probability that it is going to start to have its moment here. When that happens, well, what are the price? What are the price action? What are we going to expect from here? That's kind of what I'm trying to get at. And what I think is going to happen is we're probably going to have a steep decline. Probably going to test this level here, and then ultimately about 150 once VIX start to come down. I do think that 200. Let me put in 200 SMA here real quick. So I think that these levels is going to be tested. 148 or 150 level. Once VIX start to come down here, this could get pretty ugly pretty fast. So that's what I would pay attention to on the VIX, especially on the weekly bullish divergence on there. So right now, what I'm seeing in this last 2 days, this looks like a bear flag there. Interesting about that is when I go to the XX, it looks like we're forming a bull flag. You can see that we're having a bull flag there. So that also confirms that there's a possibility that this is just like a resting pattern before that bears can push this thing down again. So that's kind of my thought. Obviously, this is a level that bears needs to hold just below 50. I made about 162 data. I think that as long as we bears protect that level, we probably going to have its correction. So well, hopefully this has been helpful to you, and well, I will you know, if there's anything else, I will you know, put a video up again. But I thank you guys for following me on YouTube and Twitter and my blog, and you know, I just talk to you guys later.